Hi guys, welcome to Market Matters. I'm Charlotte Chong and she's Nadia Hassan. Apparently last week KLCI was under a lot of pressure and it wasn't performing very well at all. KLCI actually closed up today 0.38%, 6.22 points higher, finished at 1,649.96 points.
You were not around this week.
Yeah, I wasn't around in KL.
But this is dedication for you folks. She still checked the market, although she was on CNY.
Yeah,
CNY
actually
holiday.
looked at it this morning. KLCI was quite the performance was very bad because of the oil prices last week.
Yeah, it was actually really bad. Never mind that a lot of the regional markets were also bad as well. So you actually had 2 down days. Friday was struggling to be green, but it closed quite fat. Today, 6.22 points is not the highest. We
and
saw it
actually
at 14
the entire
points.
region was red, yes, last week.
Yeah, exactly. So it was just a kind of bad kind of look. So top gainers were United Plant, Pet Gas, BAT. On the flip side, Shell, Asia, File, all especially down. They had a poll. Malaysia's annual economic growth is apparently expected to slow to 4.3% for the last quarter.
Now, Fitch Ratings came out a report today saying that Malaysia's net oil receipts only rose slightly due to a rise in crude export volumes. But MIDF actually came out with a fund flow report last week, and they say foreign investors turned net sellers last week, but the amount wasn't very big. It was at about 197.1 million ringgit.
Yeah, so last week or so, if we want to see what regional finishes are like, you actually had a stronger finish on the US and European markets on Friday. You missed it, but Europe had a bad week also because the banks were all warning of really bad kind of times ahead. And Shanghai stocks returned from the Lunar New Year holidays, modest losses, but I suppose at that point, that's all we can hope for. Nikkei 225 up 7.16%. They were also really bad last week. This is interesting because the economy had actually contracted 1.4%. Worse than people expected, but still, the market, I think, too many down days and people just taking a buying opportunity.
No, Shanghai actually fell a little bit. Just now you say modest losses, about 0.63%. Oil prices resumed drop again as Iran loaded its first cargo to Europe. Oil was lower than $30 US a barrel, WTI. Now let's look at Hotstocks. Today, Daya Materials actually climbed to an intraday high of 10 cents, but it lost its steam at the end of the day. Yeah,
exactly. So it closed flat at 9 cents. Intraday high of 10 cents, up 5%, but saying that volumes were really heavy, a couple like 230 million around those.
Yes.
So not 230 million, I think I'm making it 20s.
20 over million.
Yeah, 20 over million. Sorry, 200 million means that their shares are more than anything. So the thing was, these guys actually lost a bit of steam, as you mentioned. They mainly provide oil and gas, of course, construction. They did rally today because we mentioned about oil. OPEC actually said they're going to cut production finally. I think a lot of people, you know, of course, during Chinese New Year, we all low song, right?
Yes.
We all low song. I swear I heard this at one particular one. May oil go up back to 100. May oil go up back to 100. So yes, I think they're not the only ones who praying for it.
I'm not very positive that this will happen this year though. It dropped to lower than $30 US a barrel now. Now oil and gas, although it says that OPEC says that they are going to cut production, but I think it's still under pressure because Iran, after they lifted sanctions, Iran started to produce again. Now let's look at third quarter earnings for this company.
For Daya Materials.
Yes, net profit actually up 12.4% to 10 million ringgit. Revenue actually up 2% to 182.2 million ringgit. Now Daya Materials rallied about 11% to 10 cents today. And that's not just because of oil and gas counter strategy. I think there's a lot of other factors behind it as well.
Well, actually, the company did announce something in December. They did say that they're going to raise about 75 million in new equity, so they want more assets for the company. I mean, it makes sense because at the moment, assets are almost at fire sale level, because everybody wants to make sure you just get it at the right price. And not only that, they said Vietnamese market, that's what they're eyeing. They are following its collaboration with Petro Vietnam. They say it's going to, hopefully to get more projects. That's going to be their ace in the hole.
Now, actually, the CEO Lim actually said that as a result of low oil prices, they're getting cheaper prices for all these oil assets, and they just completed acquiring an offshore subsea construction vessel for $120 million US, and they say they are putting on hold to buy CM Daya too, but they will actually consider to buy the asset again when the time comes.
Foreign partners are one thing they're also looking at. They're starting on engineering, procuring, construction and commissioning, or EPCC. EPCC. Downstream project worth between 3 billion to 4 billion. Whether that materializes, we all don't know. It's it's a big in the air for them, but as you mentioned, for their earnings, I mean, it's fairly healthy. If 2% on the top line is better than no percent, 2 is still more than 0, and net profit still up. So I think that's one thing they just have to be holding on for them.
So total tender book was actually at 1.5 billion 2 months ago, last December, and it had actually secured almost 510 million ringgit new contracts last year. They have about 2.3 million order book, ongoing order book. Now, just wrap up this stock. Daya Materials actually rallied about 11% to 10 cents today on the back of oil and gas counters rally. Company planning to raise about 75 million ringgit, to acquire more assets this year, and it looks to expand into the Vietnamese market after collaboration with Petro Vietnam.